listening to The Mortgage Scientists, exclusively on the Pod Station.
Hi, I'm Dave Forrest.
I'm Chris Hume. Together, we are the Mortgage Scientists.
Episode 2, Chris.
It's flown by, hasn't it, Dave?
What are we going to talk about today?
I reckon we talk about credit.
Okay, as in?
Everybody worries about, can I borrow money?
Yeah.
Can I get credit? Can I get this? What on earth does it all mean?
Where does it all start? How do you get that credit profile? One question I've always thought is, when do you get one? When does it all start? I suppose it's when you first probably nowadays, get a mobile phone, I suppose.
Your first bank account, your first overdraft, your first mobile phone, when you first register on the electoral register, when you turn 18, whether that's a rental property, student, parents, wherever that is, it starts to build a credit profile. It's magical carpet somewhere out in the ether.
Yeah, we get the people who start to, as you say, worry about it then, don't you? Again, the myths come in, don't they? And I think a lot of those myths are quite old now. Your credit profile years ago wasn't very complicated.
It wasn't. It was a fairly limited amount of information that a lender that you've borrowed money from or you owe money to would record how you've made payments or not made payments. And it was a very, very simple list of payments made or payments not. But it's evolved into this whole new product that the credit reference agencies like Experian, Equifax, TransUnion have created, all out of access to files under data protection.
Everything goes on there nowadays, doesn't it? Back in the day, if you were on the electoral roll, that was on there. You had a mortgage, you had a loan, credit cards weren't as prevalent then, but now when you think insurers are credit scoring you, your mobile phone, you'll always find a few of them as people are swapping them.
And a lot of it is because so much of what we do in day-to-day life is credit driven. Even if you take out a mobile phone contract for 2 years, you're committing to pay that subscription for 2 years.
And I think people don't understand that as well, do they? Now it's two parts, isn't it? Some's to pay for the phone because the phone's so blooming expensive, and some's the contract. So the phone bit that you're paying off is a credit agreement.
It's a credit agreement, absolutely. And if you don't make that payment to O2 or whoever you're with, they will record that missed payment on your credit file, and that can have an adverse effect on any future credit that you want to apply for, which could include mortgages.
Which is what we're always looking for, is obviously we want a sort of clean credit file, a good credit file. If someone says, right, what should I do with my credit file, then where do you start?
The first port of call has to be go and find your credit file. Contact Experian, Equifax, TransUnion. Ask for a copy of your credit file. That's the starting point to see what information is out there already, and from there you can start to look at the things that you can do to build credit and become credit ready for whenever you want to take out that initial loan, that car finance, that mortgage. There's so many things that you can do to get yourself in that credit ready position.
I always think you've got to almost become obsessed with it a little bit. You do have people who say, I don't want to look at it, it's scary stuff that I don't want to look at it. They might know they have a problem and don't want to look at it, or they just don't know how it works, so they don't want to look at it. But I think more and more you should almost monitor it monthly, because mistakes can happen, can't they?
They can.
I've found loads where there's been a mistake by a credit company, or they might have moved out of house 5 years ago and there's something on there from that house that they didn't know about. So you have got to get up to date. That's your first thing. Get it, look at it and see what it is.
It is, and making sure that the information on there is absolutely accurate. The address that you live at currently has to be the address that shows on your credit file on the electoral register. Lenders will look back 6 years on that credit file. Any addresses that you've lived at in the last 6 years should really appear on there. Making sure that not only your credit file shows your current address, but things like your bank statements, your payslip, your driving license. The number of times that we see documents that are scattered all over the country in student accommodation when they were there. The driving license has never left the parents' house. The bank statements are at a place that they lived 3 years earlier. This inconsistency is an enormous red flag to anybody or any lender that you want to borrow money from, whether it's a mobile phone contract, whether it's your car insurance, whether it's a mortgage or a loan. Consistency is one of the first things to get right, and accuracy is up there as well for me.
And I think a lot of the lenders that we're using, talked on the previous episode about AI, A lot of lenders are computers making a decision, isn't it? If that computer can't see it, or it's not quite how it should be, it'll make the decision you can't have it. And you can't always turn that over with that particular lender because that decision is made. And it might be just 1 point on a credit score. I always say it's a bit like your driving test. One little mistake, okay. 2 or 3 mistakes will take you below the pass level. And it's a similar thing, isn't it? One little blip could just take you below where you need to be to pass.
It is, as you say, having a monitor on your credit file to keep an eye on what is being entered on there by financial institutions that you've got a relationship with. But also, one of the key things that's on there as well is any searches that companies have done on you and your information. So that will show potentially a hard search for a full application to literally get the money from the lender, or what's called a soft search, where you might just be saying, I wonder if I might be able to. But those searches, if you're monitoring your credit file, will give you a very early indication if there's any fraud carried out in your name, because your credit file is also one of the first ports of call for you to identify fraud on your account and in your name. And it's really important to make sure that you're very careful about your information, who has access to it, all these kind of things. And your credit file really is very, very important.
Yeah. I'd say probably quite a few instances where that only ever comes to light when they come to us and we go for a mortgage. You know, they've not really looked at it before. We go for a mortgage, it fails, and we say, oh, it's failed. But if you have a look at your credit file, this is why, oh, I didn't know about that. And it can be something. Yeah, I've had loads of instances like that. I had one probably about 10 years ago now. Which this client, absolutely fine. It was all going to go through fine, and it failed. And when we looked at the credit file, he had a car loan. The bank who he was with had put the monthly payment as the balance of the loan. So we had a £35,000 a month monthly payment. It was never going to pass. We had to rectify that, and then it passed fine. So, but that only comes to light when they come to us. It's almost like, I'm not saying it's too late then, but there's quite a bit of unravelling to do then, isn't there, to get them back to the position where they need to be.
There is. And again, this is why, as brokers, we ask clients for an enormous amount of documentary evidence, payslips, bank statements, accounts, credit files up front, so that we can truly analyse, with an underwriter's view, what that would look like, and kind of get in the feel for the credit worthiness and how different lenders might view the information on that credit file. Because it's really important to understand as well, one of the massive myths about credit files is blacklists. Is there a list somewhere that lenders share between themselves of clients that they should not lend money to? The answer is there is no such thing as a list where lenders have put a mark on you to say, we will not lend. Let's get that out there now. Every single lender will view your credit file with their own eyes and their own view and their own criteria. Now, one lender may be more than happy to lend to you if you've had a county court judgment, or you've had missed payments, or you've not lived in your address for 3 years. They might be more than happy to. Other lenders may not. But every lender will look at your credit file with their own view and apply their own criteria. And this is again where we come in.
Yeah.
Because there's 70 to 80 different lenders with all have different viewpoints on that one data set on a credit file. And we have to interpret that. We're actually quite good at it.
Yeah, this is where that I don't think I'll get a mortgage.
Yeah.
You know, or I've approached my bank and they've said no. The bank down the road is exactly the same from a rate point of view, or, you know, you're not going to suffer too much just because you've got a blip on your credit file. But, you know, they may well do it. Or most lenders will do what we call credit score. So they'll give you a score from their system. Some don't. Some actually just look over the credit file, don't they?
Yeah.
And they're the type of lenders where you can have a conversation. And someone might have had a life event on their credit file. And if that's a one-off event and, you know, they couldn't help it or something happened, lenders will listen and, you know,
Totally.
help people out, won't they?
Totally.
It's not that myth that the bank likes to say no, or the bank likes to say yes and suddenly started saying no. It's not really right, is it?
It's not. And again, I think this is where taking advice about your current credit position is really, really important. Whether you're looking to buy a house, take out a mortgage and all the rest of it, or whether things haven't quite gone to plan and you are in debt and you are wondering, which way do I turn? There's a great charity out there called Step Change. They are absolutely geared up to help people in financial difficulty and help them overcome that financial difficulty. So anybody who is struggling with debt, finance, go and talk to Step Change. Come and talk to a broker, and we can point you in that direction, because we understand how these things can happen and we understand how you can actually turn it around again.
Yeah, you can constantly give people advice of things to do now to help them in 6 months, 12 months. If we look at getting yourself credit ready, first time buyers are probably the ones that you get most who say, what should I do? And again, it may be start to get ready early. If you're thinking of buying a house in a year, it's a perfect perfect time to sit down with a broker.
Yeah.
Don't go and offer on a house and then come and see a broker. It does happen quite a lot, doesn't it?
Unfortunately, yeah.
Yeah. And we get involved, and about 99% of them are all okay. I think the earlier you can come down and sit down with your broker and start to plan, because 6 months is not a long time.
It's not.
We're just going to go to a commercial break. We'll be back after this short message.
Do you have a passion, hobby, or expertise and want to share it with the world? Why not do a podcast? The Pod Station offers a wide range of packages to make this a reality, ranging from training and support for those who have no idea where to begin, to podcasters who just need somewhere to host their show. With prices starting at a mere £15 per month, you can now get involved in one of the fastest growing entertainment forms in the world without all the headaches. To find out more, visit thepodstation.co.uk/station-packages. And remember, those with passion, podcast. This episode is sponsored by Dunkin' Biscuits, a biscuit lover's guide by Chris Hugh.
From a documentary point of view, when we're asking for payslips, bank statements, self-employed accounts, all these documents, the reason we're asking for them is because the lender will ask us for them. They're not asking for them so they can put them in a nice little paper envelope somewhere in a file. They're asking for them because they want to analyse them. Some of the things that you really need to make sure, and these are bugbears of ours, aren't they, Dave?
Yeah.
Really need to make sure that you've not got on your bank statements are multiple episodes of betting. Lenders hate betting. How much do they hate betting?
Yeah, well, it's not illegal, is it?
No.
You can do it. You can quite imagine what it says to an underwriter spending £100 a month, even if you can afford it, on betting. It's just getting them ready and making things look okay. That's probably the one thing that will bring that down, won't it?
The other thing to keep an eye on is, please, whatever you do out there, do not fall into the trap of payday loan. Payday loans will quickly spiral into a lot of financial pain. There are far better ways that you can borrow money short term than payday loans. By all means, come and talk to a broker, get some advice. If you just need to sort the washing machine out because it's broken, please stay away from payday loans. There will be better avenues that you can create by getting credit ready, particularly from a point that credit cards are probably one of the first things that you might look to when you're wanting to build your credit profile. A credit card with a small credit limit, use it, pay it off every month. Use it, pay it off every month. That, with a £600 limit, for example, could be your emergency fund if the washing machine breaks.
Yeah.
So that stops you needing to go to that payday loan scenario that is really, really bad and lenders hate to see on your bank statement.
Well, again, it shows a pattern, doesn't it? We're always there for advice on that type of stuff, not just when you want a mortgage, because that could be a client who's got a mortgage, does the payday loan in between. You go and see him 2 years later, 3 years later to have a look at the mortgage again, and then suddenly you can't get them. The rate's worse than it was because something's happened in between. We're always open to advice on that as well, even in between for existing clients, aren't we? As you say, there's always ways to do it, but I think the best thing to do is get some advice.
Absolutely. And it's take advice at each step, and we're there to help structure that months before you really actually say, I want to put an offer on a house. Yeah. Bank statements do make us giggle sometimes though, don't they, Dave? Because your mates send money to you. Some of the funny little comments and references that people put on their accounts. It's,
lads on a stag do in Benidorm is not good for bank statements.
It's not at all. No. Hen nights, I think, are just as good. But so, they do make us giggle, but if you're thinking of buying a house, please tell your mate to stop putting the funny messages on.
For first time buyers, they can tend to be worried, can't they, about it a little bit. I've got no credit profile, but like you say, a little credit card with a very small balance can just help you with that. But I find most people have got a car on finance now. Lenders are so complicated, aren't they? And they're so in tune with what the market is. Your bigger lenders, they want first time buyers. I'm sure they tweak their credit score to make sure that more of those pass anyway, I suppose.
Yeah, and we know who they are. There are mortgage lenders out there who actively campaign to get first time buyers borrowing from them. So there are different schemes that lenders will do for first time buyers. They understand them maybe a bit better. Every lender has their own kind of niche that they like, don't they?
Yeah.
Some lenders love self-employed clients. Some lenders like contractors. Some lenders like first-time buyers. And they all tweak their application scores and processes that best meets their target audience.
Yeah. And they change as well from time to time, don't they?
They
can change throughout the year. You think, I'm using this as my first-time buyer. These look, but they don't. They change. And the thing is about your credit profile, your credit score, or whatever we're going to call it, probably the most thing it impacts more is, as well as just passing it, it's the rate you're going to pay. That's probably one. And I think when we talk about things like protection, having something something in place if something happens to make sure your mortgage is paid, that's going to affect your future rates. It's almost like that'll help you keep your score high, which is not just about your first mortgage, it's about the mortgages going forward, isn't it? That's probably the biggest thing it affects, is the rate you're going to pay.
It is, because largely a lot of clients can borrow money from somewhere. The question is whether you will have the choice of the high street or whether you're then into the non-high street. So for example, we know that there are lenders that understand clients might have a life event, they might have had a county court judgment, they might have missed payments on things, because things happen in life. That's just how things are. There are lenders that are maybe not high street lenders that will understand that and will agree to lend you the money, but they will charge a rate appropriate to the risk that they perceive. Monitoring your credit profile, trying to get it as pristine and perfect as possible, is really the best thing to do months in advance of wanting to borrow the money.
And then your credit score with the lenders really are the job you do. What is it, more of a professional? Are you self-employed? Because lenders will score that slightly different as well, won't they, depending on what you... It's about your whole profile really, isn't it?
It is. And what you might see when you look on Experian or Equifax or TransUnion is these credit reference agencies will give you a perceived credit score. Now, that's not a score that any lender will use in their application process. That is the arbitrary score that credit reference agency feels is appropriate for the information that they can see about you on that particular day. Now, the way a lender will view the information is they will completely ignore that score that Experian or whoever it is gives you. Lender's credit score not only comes from your credit file, but it comes from the entire application process, which is everything about you. Who are we? Where do we live? How old are we? What children do we have? What dependents do we have? What commitments have we got? What do we do for a living? How long we've been in the role? All of these things are additional elements that a lender will look at when making a credit decision. The score that you see on your credit file, take it with a pinch of salt, please. Don't get hung up about it. Generally, if it's higher, it's better. If it's lower, it's worse. But don't get hung up about it.
But again, that's where that going to Benidorm with your mates and having that on your... You could have a really top score, but that's going to stop you with a particular lender, isn't it? You're right. The score is a score, but each individual lender have their own what's called a scorecard, and they move that up or down or change it. That we were talking before about first-time buyers. If they want first-time buyers, they're probably going to tweak the score a little bit to get those people in. I've always found one that it used to be more of a problem. You mentioned it with student addresses, or if you've lived in 3 or 4 flats over a few years, because if you tend to move, don't you? I've seen it's become less of a problem. Being accurate on those addresses is quite important.
Yeah, addresses for flats and apartments has always been a very tricky one with credit reference agencies, not marrying up with necessarily the Royal Mail address, and therefore the lender system not marrying up. Sometimes the lender computers should actually say yes, but because it can't match things up because there's minor inaccuracies, the computer then says no. And there's no way you can overturn that, which is really frustrating when you know a lender should be lending the client the money, but it's a computer system that can't quite get its head around it. And again, is this where AI is not quite up to the...
up to the job, It's got to be looked at manually, hasn't it? You know what I mean?
Yeah.
We go back to the day when you had to fill out applications in paper, and that was always difficult with addresses because there was no postcode search or anything, was there? You've got a flat. Is it flat 20 in number 1, or is it number 1 in flats? You just didn't know, did you? That was always a difficult one.
We're trying to get credit ready. It is making sure that things are as accurate as can be. They're all at the right address, including your driver license, your pay slips, and literally just making sure that you've got everything there. Make sure that you pay things on time. That is the biggest thing, that as soon as you miss a payment and that missed payment goes onto your credit file, even if it was incorrect, it's a devil's job to try and get it corrected.
You're always fighting then, aren't you?
You are, and unfortunately mobile phone companies are some of the worst at putting missed payments on credit files. You'll have an upset with a mobile phone provider because the service isn't quite what they said in your area, and you can't make phone calls when you're in the lounge, and so you say, right, that's it, I'm not going to pay the direct debit this month. They'll soon learn. Well, they won't. They'll just, fine, don't pay me the 30 quid. I'll put a missed payment on your credit file. No skin off our nose because you still owe us the 30 quid.
Yeah, it'll sit there.
And it will sit there. If you do have a dispute with any financial institution, really, the answer to solving it is not to cancel the direct debit. You must still make those payments and take up the resolution process through the normal channels, because then you will not have missed payments on your credit file. If you do need to then move financial institutions, you can move, because another other one will look at you with a favourable view. But you can then take up that resolution through the normal processes. Financial institutions, really good at dealing with financial resolution. It's geared up to sort out customer problems very, very quickly and accurately as well.
Mobile phone's probably one of the biggest ones. There's so many people will say, well, I don't like them, I'm leaving. Right, I'm cancelling the direct debit. Off they go to the new one. And they do that, where if you just sort of said, well, I'll carry on paying it and then I'll get my money back after the fact, be fine. So many times I've seen that where I've had a dispute with them, so I didn't pay them.
Yeah, and it's the worst thing that can happen.
No, you're not going to unravel that.
No.
It's not going to go back, is it?
And it will be on your file for 6 years.
6 years,
It will have an effect for at least 3.
Yeah.
Typically, anything like that, you think you're teaching them a lesson. You're not. It's just a bigger problem for you in the future, which will probably cost you more. If you then need to pay a higher interest rate, it's certainly going to cost you more than the £30 that you've kept in.
Yeah. That's it. I suppose the message is, early as you can, have a look at it and get in to see your broker and discuss it and start to build up. Even if you don't know anything about it, come in and see us. Yeah. We'll explain it.
Exactly. We'll put a link up on how you can access your credit file as well. There's various ways that you can do that, either direct with the credit reference agencies or there's various others, Cull Credit and a few others, not to advertise anybody in particular. No. We'll put a link up how you can get your credit file. That's been a great episode 2 there, Dave. I think we've understood a little bit more about credit and getting ready.
Yeah, brilliant. See you on the next one.
See you on the next one.
To find out more, email info@themortgagescientist.co.uk.